Hello, guys. Welcome to another trading day. Today is a major trading day. We have some major impact news and sit. Oh no. Prior to this, there's been no news event this week, so I've been waiting patiently. Although I took a trade yesterday on British pounds USD because there was news for British pound. But today, major trading day, I have some expectations, some volatility expectations. So I'm going to be taking. Oh boy, easy, yeah. Some trades today. So what builds up my trading day? When I wake up in the morning like this, I just spend some time with my dog. Oh, sit, shake. Good boy. He loves spending time with me, and I can also do some exercise. So, but apart from that, I'm just gonna be studying, watching some YouTube videos, ICT YouTube videos, because no knowledge is lost. Do my push-ups in peace. Climb my back if you will. So okay. What are you doing under me, boy? Run! So don't bite my head. Eh.
Did I expect this entire range to be delivered in 1 week? No. Useful to learn as a trader that views obviously the E-mini S&P. On the daily chart, you're looking for swing highs and swing lows to get your liquidity. And majority of your trading in the
Welcome, guys. So 15 minutes to CPI news, and I'm ready. I'm ready to go. I have my expectations, and well, it's not about my expectations, it's about what the market does actually. So I'm going to be watching closely what the market does. Hello, guys. So first CPI, I made money today, and I'm just going to be showing you like my charts. I'll be showing you my charts so you see what I was thinking during the trade. So this is my chart. You see this line? I just highlighted 930. So after the CPI news, I lost money. I lost some trades. Well, but that didn't hinder me from making money back. I made what I lost and I made profit. So let's start from the 1 hour time frame. I wanted price to take out this liquidity initially. So price didn't take out that liquidity, but it took out this one. You can see it on the 1 hour time frame. Price took out this liquidity here. That's this high. There are stop loss there. So and I wanted price to take out this one, then show me my sell pattern. But it didn't do that. So I use 930 entry. So from 930, this is what I did. This is what I did from 930. Let's drop down to the 15-minute time frame. This is 930. I took my trade on the 1 minute time frame, which is the time frame I take all my trades. So this is above the recent high. This is above the recent high. See how price broke structure around 930. exactly around 9:30, price broke this low after it has taken this high. That's what we call a shift in structure. So this is a shift in structure. So any fair value gap, we can enter from that. Can you see this candle now? You see this candle's low and this candle's high. The gap is highlighted in between. So from this candle's low to this candle high, that's what we call a fair value gap. So you can enter right there. You can sell right there with your stop loss above here. Although I didn't take that trade because it was too risky for me, but I'll show you where I entered from. If I took that trade, that would have been amazing too. But I'll show you where I entered from. So I didn't take that one. I waited for price to show me another confirmation that is respecting this gap, and it respected the gap beautifully. See the way it traded lower again? As it traded lower, it created another gap. So this second gap it created was where I entered from. I entered from here. It traded lower. You see, it went back to the gap. That is another opportunity to enter. When you enter from here, from this gap, my stop loss was above this high. So that was where my stop loss was, above that high. So when price entered the gap, I sold again. Then I looked for confirmation on the other time frames. So let me show you where I got my confirmation from. See this box? I didn't highlight it, but I'm going to show you. Yeah, where did this box come from? Is it the 3 minutes? No, it's not the 3 minutes. Is it the 5? No, it's not the 5 minutes. 15. Yes, exactly. Exactly. This is where I use my confirmation from. You see the this high and this low, that was this box I drew here. So we call that reclaimed fair value gap. Like that gap that price made when it was taking liquidity, you can use that to sell too. And this one is from the higher time frame. This one is from the 15 minute inversion fair value gap. So I use that as confirmation too. I use that as confirmation on the 1 minute time frame. So you see, after price traded into this fair value gap, she came lower. See how we entered this 15-minute fair value gap, and it just went above to touch that 1 minute time frame, and price went down again. Price went down again. So that's another confirmation, letting me know that yes, my entry is valid. See this gap here? I put it here. This is from the 1 minute time frame. I took another partial entry here. Sell here. See how it came down? Another opportunity to sell. The reason why I took this entry was because if we look at the bodies of the candle, you see they are all in this. No, wait, let me not confuse you. See this gap here? This gap is another inversion fair value gap we can use to enter. So that is another inversion fair value gap you can use to enter. And that is what I was looking at initially. That's what I was looking at initially. Go down to the 1 minute time frame, and you see this. When price broke down, this inversion below this 5 minute inversion fair value gap, you can enter right there. or you can wait for it to enter this 1 minute fair value gap. You see, it traded into the 1 minute fair value gap, it came down, it entered the 1 minute fair value gap again, it came down, and the third time it entered the 1 minute fair value gap again, and see the way it broke down. Then if you look here, it went to the 5 minute inversion fair value gap. See how it just trades into it and trades down to my target. My target was this low and this low, and I got that beautifully. So thank you guys.